Good morning, participants, and I welcome you today. The second session of GST interplay with other laws. And yesterday we had a great discussion, good discussion on Constitution and how we can take the benefit of Constitution, what is the power has been given, and all that things we have discussed. Today we have with us none other than CA advocate V. Raghuraman from Bangalore. And we have all of you know him maybe personally, and you must have heard him. So today he is going to discuss GST versus income tax, because all of us are practicing in income tax since ages. So we know the income tax provisions and how income tax provision can be applicable for GST. That's what we are going to discuss. But before inviting Raghuraman sir, we have with us CA Vishal Doshi, Vice Chairman of our region. I request Vishal Bhai to share his thought. Over to you, Vishal Bhai.
Thank you, Manish Bhai. Good morning to all the participants. Good morning to the speaker, Raghuraman ji, Hitesh Bhai, Jinit. Friends, I would say that this is a very, very unique program, and my compliments to Manish Bhai for organizing such a program. I very strongly believe that now with more and more compliance getting electronic, it's becoming more of a a data entry sort of a job. And as professionals, we need to use our intellect in more, I would say, matters which are of litigation or interpretation or law related. And that is where these type of programs, the unique programs like we are having today on the interplay of GST with other laws, it makes us very much ready for the tomorrow which we are looking up to. And we have with us, like Manish Bhai said, an expert, Raghuraman ji, whom we have heard earlier. He has always been a friend of ours, especially at WRC, and whenever we invite him, he is more than happy and willing to support us, and with his unique style of presenting and discussing the matters. In fact, I have heard him on a couple of occasions, and sir, I tell you that whatever you explain, वो deep घुस जाता है basic से, and so that is the I would say speciality of Raghuraman ji. And today's subject, income tax versus GST. Ever since GST has come into force, there has always been this question about how GST and income tax would link to each other in future if there are any mismatches. And with more, like I said, more and more compliance getting electronic, it becomes very easy for the government and the respective departments to do the data mining and throw up the differences in various aspects with respect to the income tax and GST. And friends, let me tell you, I'm a very firm believer that in 3 or 4 years down the line, the department, I would say the government, not a specific department, but the government of India would be able to prepare the profit and loss of the businesses even before the business themselves would be able to prepare. With so much of information and so much of mapping and so much of data mining, I believe that day is not far off when such a situation. That is where our responsibility, our role as professional becomes very, very important, I would say. And since we are all very eager to listen to Raghuraman ji, I will not take much time. Thank you for this opportunity and wish you all the best and a very happy learning. Thank you.
Thank you, Vishal Bhai. Now, before inviting Raghuraman sir, and I request my council colleague and Vikasa chairman, CA Hitesh Pomal, to kindly introduce today's faculty. Over to you, Hitesh Bhai.
Thank you, Manish Bhai, and as Vishal Bhai has rightly said, my compliments to you for structuring this type of unique program, and this is the need of the hour, obviously, to interplay of GST with the other laws, and that is very much required. And to introduce V. Raghuraman sir, he has the illustrious career, and throughout his career he is a ranker. That is what I am observing from his CV, that he is, apart from the chartered accountancy, he has completed CS also. He is a graduate cost accountant also, and he has done the LLB too. And throughout the inter CA or the final CA, ICWA, he has got the rank throughout his career, it seems. Yes. And professionally he is practicing as a advocate, and he was in the service, he was with the profession for 30 years as CA and the advocate, and he is still practicing as the advocate, and his specialization is the indirect tax, especially GST and custom service tax, foreign trade policy, FEMA, etc. And he is a visiting faculty at the Indian Institute of Management, Bangalore. Even he is frequently visiting CA Institute also, and he has addressed a large number of seminars and published several papers in national magazines on GST, excise, and other indirect taxes. And he was a member of the Indirect Tax Committee of the ICAI Delhi for the year 2014-15. And he has authored 2 books, that is Landmark International VAT Decision and its relevant to the Indian GST, published by international publishing house, that is Wolters Kluwer. And second is about the GST and indirect taxes principles demystified, that is published by the international publishing house, that is CCH. With this introduction, I would request Raghuraman sir, and I am also, as rightly said by Vishal, eagerly waiting to listen to the Raghuraman sir also. Over to you, Manish bhai.
Thank you very much, Hitesh bhai, for the introduction. And apart from this, Raghuraman sir is easily approachable, and whenever we request him for any guidance, he is always available to the institute, and a very good person by heart. And if you see the various landmark judgment in service tax, as may have, and a few cases in income tax also argued by him. So now we are eagerly waiting, sir, to listen to you. Over to you, sir.
Thank you. I am deeply obliged to WIRC and especially Mr. Manish. This design of other laws and its interplay with GST, I think the first time it is being done in India, if I'm not mistaken.
Yes, sir.
And
This
at
is
least,
first time
yes,
this kind of
very,
course is
very, I
happening in
think
India.
Manish ji deserves a round of applause for this from all of us, because and the WIRC also, because they've made this program come alive with something different. Even for me to prepare for this seminar, it took me some time because it was completely different topics, than what I usually address. So I think I should thank WIRC for educating me once again. Now, if we come to the topic as it is, let us try to see. There are so many areas where there is a convergence between GST and income tax. There is also a divergence between the income tax provisions and the GST. So let us start from basics, and how much we can cover we'll see, because this is a topic which can go on for probably 2 or 3 sessions also, if you look at it in detail. But I will try to cover all the important points which I think is of extreme importance to the chartered accountants. As was told to you, data mining is going to cause a lot of problems. It is an opportunity for us. Wherever there is a problem, there is an opportunity. Data mining cannot be done in a vacuum, and data mining cannot be done blindly. Why? We will see in this rest of the session why some things cannot be done blindly. Now, let us start from the basics, the very constitutional basis for application of these 2 laws. If one were to see what is the constitutional basis for direct taxes, all of you know that it is Article 246, read with entry 82 of list 1. You look at GST, you have 246A. Now, can we say, because 246A starts with notwithstanding anything contained in Article 246, it overrides 246? My answer to you is no. It is a limited provision. It is called special provisions for goods and services. So please understand, every time notwithstanding is used, it does not mean therefore it overrides everything. No. You have to see the context in which the non-obstante clause is used. In my humble view, the context in which 246A is used is simply this. As far as goods and services tax is concerned, there is no necessity to look at 246. Please look at 246A only. That is all the limited effect of 246A. When it comes to income tax, it is plenary that you look at 246 and entry 82. Both operate in their own field. As we know, both operate in their own field. Income tax and GST operates in its own field. Nothing overrides the other. There is no question of invoking 246A and saying GST law overrides Income Tax Act. No. It is a special provision for the purposes of goods and services tax. Nothing more, nothing less. So this we should keep in mind before we decide whether this is overlapping or that is overlapping. There is one very important thing which I would like to tell all of you, and that is this. Income tax is a tax on income. It is not a tax on supply. Let us be very clear on this. Let us not think that these two are overlapping, that when data mining is done from the income tax website, automatically it means that it will lead to some complication in GST. It is not so. The charging provision in income tax, if you look at section 4, 5 and onwards, the charge is on the total income earned, while the charge in GST is on the levy of activity of supply of goods or services. One is an income-based tax, another is a transaction-based tax. So let us be very clear on this. These two don't overlap. These two have their own area of operation. GST is a transaction-based tax. So let me come and let us see what happens if an income tax authority comes into your business, where you're running your business. Let us say he finds some money. Perfectly all right for him to say that, very perfectly all right for him to say that this is an unexplained income. He can say that. You will have to prove otherwise if you cannot reconcile your books with the other aspects. However, for the GST person to say that this amount has arisen because of sale of goods or supply of goods and services is a completely different issue. It is not automatic. Please understand, data mining doesn't mean that the charge is automatic. A similar case came up in what I call Girdhari Lal Nane Lal versus STC. This is reported in 1996, 3 STC. It was followed by the Supreme Court in Halima Zubair's case, which is reported in 13 STR. Supreme Court said this, and this is very important for us to please keep in mind. Just because you have recovered cash and you want to bring it to tax under income tax, automatically doesn't mean it has arisen out of sale of goods. The sales tax authorities will have to prove that it has come out of sale of goods. The same thing applies to the GST authorities. GST authorities will have to specifically prove that this is arising out of a supply transaction, supply of goods or supply of services, and that has to be done by evidence. So these two case laws would say that automatic application of data mining is not possible. One has to look whether the charging section is attracted or is not attracted. And if the charging section is attracted, only then you are going to have a charge. If the charging section is not attracted, the question of there being any tax does not arise. So please understand that it is not automatic. In any law, application of the charging section is very important, and these two case laws set out that basis. Why it is not automatic? Let us then look at, this is as far as the charging section is concerned. Let us look at some issues which may come up. If you look at the collection of the taxes, the levy and collection of the taxes, as far as income tax is concerned, levy is by the union legislature, while in GST it's a concurrent legislation. Probably the first time in the history of India we have a concurrent powers being given both to the central and state legislatures to collect the tax, to levy and collect. So therefore, while in income tax it is the assessment year which is important, in the GST levy the question of assessment year doesn't even arise. It's the transaction based tax. Each supply attracts a tax. It could be exempt, it could be taxable, but it attracts a tax. Therefore, this fundamental difference of the tax charging section, the collection section should be kept in mind before we conclude why and what is the difference between these two. In fact, there is an old case law of the Orissa High Court, CST versus Jagatbandhu Mohanty, that is reported in 12 STC, which brings out the difference between sales tax and income tax. What it says is, whereas income tax is for the assessment year, is assessed on the income of the previous year, sales tax becomes liable to be paid immediately after each sale is effected. Same analogy will apply here. So we must keep this in mind before we get into considering what is the scope of the tax. The second and most important thing that we now, having examined the charging provision is not automatically applicable, let us look at the difference in the tax. Income tax has to do with income. It's a direct tax. Direct tax means the tax incidence falls on the person who has to pay the tax. If I earn an income, I pay tax. The incidence falls on me. I cannot pass it on to anybody. But GST is an indirect tax. The liability will fall on the trader, but the incidence falls on the consumer. That is why it is called an indirect tax. Second, GST is a levy on supply of goods or services which take place in the course of furtherance of business. So it's a very restricted tax. Only what is in the course of furtherance of business will be covered by GST. To give you a simple example, let us assume a housewife is cooking food, let us say makes food and gives it to people. It may be income, but is it income in the course of business or furtherance of business? Is something which has to be differently explored in income tax vis-a-vis GST law, because the definition of business in these two are different. For example, I'll give you another example. Let us assume a landlord enters into a JDA with a builder. Transfer of the capital asset in the year in which it is transferred, possession is given, may give rise to capital gains tax. But can you say that him giving this land for the purpose of development is in the course of furtherance of business? Is a completely different issue. It's a completely different question. Income from house property may be taxed under the Income Tax Act. But can you say that it is in the course of furtherance of business? That is a completely different question when it comes to GST. And therefore, we have to examine the GST law and see the definitional differences. Please keep this in mind. Automatically, if something is income, it does not therefore mean that GST is attracted. You look at the definition of business in 2(13) of the Income Tax Act and contrast it with the definition in 2(17) of the GST Act. In income tax, business includes any trade, commerce, or manufacture, or adventure in the nature of trade, commerce, or manufacture. Profession includes vocation. If you look at business, however, in GST, it includes trade, commerce, manufacture, profession, vocation, etc., 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 and it runs into a large area. One has to look in and see whether these two will form the same basis or is it different. Please understand that GST will arise only if it is in the course of furtherance of business. If you look at the difference, let us look at what is an income tax defined as business and how it is different in GST. If you look at Karnani Properties case 82 ITR 547, the Supreme Court would say any activity which is carried on in an organized manner is business. You should have a profit motive. Of course, now that motive has been dispensed with in the GST laws. Volume, frequency is not important. Pecuniary benefit is not important. But however, it should be organized. It should have the essentials of what is business. All professions are businesses, but all business is not profession. This comes from Christopher Barker's case. The King's Bench decision said that stockbroking is business. It is not a profession. Even if the stockbroker gives advice. Same thing was followed by the Bombay High Court in Lalubhai Nagardas case, 204 ITR. So business would mean that my intention is to carry on an activity, probably repeatedly, to make profits. That is my intention of doing business. When I say business means, it means that is the general activity. So therefore, when you look at the definition in Income Tax Act and contrast it with the definition in GST, the purpose is different. And this is where we should be careful. In the Income Tax Act, there is no need for anything like contract and consideration. When you want to tax income, income can arise. Contract and consideration is secondary. Income arising, it is taxable. But in GST law, the supply should be for consideration in most of the cases. There are exceptions, I recognize, but the supply should be for consideration in the course of furtherance of business. That means each transaction should be supported by a consideration. The emphasis on GST is consideration, while the emphasis of income tax is income, as defined in 224. So the conceptual difference, please, chartered accountants, advocates, all of us, when we advise our clients, we should keep that in mind. Conceptually, it is different. This, in GST law, a consideration is important, and therefore there should be a contract, oral or written. If this is not there, there is no GST being attracted at all. It could arise, an income could arise, but it won't be taxable under the GST law. If you look at a decision in the wealth tax, the Andhra Pradesh High Court, this was a very Devireni Avinash's case, 412 ITR, the Andhra Pradesh High Court said this, it's a wealth tax case. But they said this, an owner who executes a developmental agreement necessarily does not mean that he intends to carry on business. This is a very important thing. You can bring him to tax as income, no doubt. But it does not mean that he's going to carry on business. He may just enter into development agreement to develop the property as an investment. It need not be that he has to be only under business. What is business in income tax may not lead to it being taxable as business under the GST law. Let me take another example. A person who preaches Vedanta. This is the famous case Krishna Menon versus CIT 35 ITR. You will find the Supreme Court saying, teaching of Vedanta is a vocation. Preaching of sermons in a church, All Saints Church, Karnataka High Court held, it is a vocation. So if I get any income out of this, yes, it is taxable under the Income Tax Act as a vocation, under the head income from profession or business. But that does not automatically mean that it is taxable under the GST. GST law, business includes vocation. I agree with you completely that it includes vocation. But what I get should be in the course of furtherance of business. In other words, it should be for a consideration. If I go to a church regularly and give discourses and get the church pays me money, yes, it will come under the GST law. But contrast it with another person who goes to the church, speaks, does not insist on anything, but gets contribution, and he collects that contribution and goes. There is no consideration, there is no contract. It is simply a voluntary contribution given. Such a voluntary contribution may be taxed under the Income Tax Act, no doubt, but it cannot be taxed under the GST law because there is no consideration, there is no contract. This difference should be kept in mind when we compare these two laws. You can't data mine automatically and say this is taxable in GST. So not possible. The very basis of the laws are different. My vocation, my maybe income for Income Tax Act may not be income if it is a voluntary contribution. I may speak on Vedanta for hours together and have my Sishyas donate money to me. That is merely a donation and it cannot be bought under GST as a tax on supply of services. There is another important thing which we should keep in mind. If you look at what is this distinction, you must look at the decision of the Supreme Court in Sai Publication Fund case 126 STC, where they made this distinction, though they didn't deal with income tax as such. They said that a trust which is set up for charitable purposes, whose incidental activity is sale of material, sale of books, propagating Sai Baba, cannot be taxed under the sales tax regime because the activity of business is incidental to charitable activity, not the other way around. If it were the other way around, it will be taxed, not this way around. In our GST law, if you see, the same words are used. Any activity or transaction in connection with or incidental to a business activity. So when you decide whether it is business or not, the tests to be followed is Shaw Wallace's case of the Privy Council, Karnani Properties case of the Supreme Court, and then there is a very famous case of the Supreme Court in Venkateswamy Naidu's case, 35 ITR, where they say what is in the adventure in the nature of trade. Adventure in the nature of trade, that will be taxable under the income tax. Whether or not it is taxable under the GST is something which has to be tested completely on the anvil of whether there is a consideration or there is no consideration. There is a contract, there is no contract. So please understand between these two, the difference is that one is income, can be taxed, but if you want to tax it under GST as business, you will have to necessarily show that that business is, that particular item is backed by a contract, oral or written, and there is a consideration for the contract. Both of these are important before we come to a conclusion that it will attract GST. So please keep these principles in mind. Second, the third issue which comes up, what about illegal income? Illegal. I do things which are illegal and earn income, profits. You can bring them to tax because income tax has nothing to do with legality or illegality of income. Even deduction of expenditure incurred towards an illegal business was always held to be allowable under the Income Tax Act. Till such time, an explanation is inserted to section 37, which reads, of course, a little differently. Fact of the matter is that in GST also, just because you make an illegal transaction of supply doesn't mean you can get out of tax. So here there is a similarity. If you supply, suppress that sale or supply and make income out of it, such a supply will attract tax whether you report it in your bank account or you don't report it in the bank account. So let us be very clear. What is tainted with illegality will be taxed in both the regimes. The difference only is in income tax, it becomes an unexplained income which can be easily taxed. But when it comes to GST, the revenue authorities still have to prove that it is out of provision of supply of goods or services. That is the only difference that you can find as far as illegal income is concerned. These two differences should be kept in mind. If we look at one other issue which when we talked about business, I talked about consideration, voluntary contributions. So let us extend that discussion and go how charitable institutions are taxed in both these legislations. If you look at section 11 of the Income Tax Act, it is very clear that income derived from property held under trust is not included in total income, provided certain conditions are satisfied. As far as GST is concerned, exemptions have been given to entities registered under 12AA of the Income Tax Act for carrying on charitable activities. Charitable purpose in Income Tax Act and charitable activities in GST. If you look at charitable purpose in Income Tax Act 2(15), It talks of relief of the poor, education, medical relief, preserving environment, preserving monuments. And they have a class, any other object of public utility. So it's very widely defined what is charitable purposes. But when it comes to the GST regime, charitable activities which are exempt is mentioned specifically. Public health, not all of public health, only certain public health are exempt. Advancement of religion, spirituality, or yoga is exempt. Advancement of educational programs or skill development, preservation of environment, like this. So the scope seems to be different in both these legislations. But we will have to look in and see whether the same thing will apply, the principles will apply here, will apply here. Do I have to get into an exemption to take GST exemption, or I don't? Can I say the charitable purposes that are done in Income Tax Act will prove that I'm not at all in business? Can I say that I'm not in business at all and therefore GST doesn't apply at all? Why go into the exemption notification? There's no necessity for me to go into the exemption notification. If you look at Sabarmati Ashram's case, the Gujarat High Court, beautiful decision. What did they say? They said Sabarmati Ashram is run as charitable institution. The surplus milk was being sold. That surplus milk which was being sold from the cows which were giving milk was applied for the purposes of the ashram. Gujarat High Court beautifully said, you cannot say that this is business income. It is nothing but an activity incidental to charity. Activities incidental to charity are also charity, because they're used for charitable purposes. So can we say, therefore, that the sale of milk, assuming it's, let me put it this way, sale of product it would be, it doesn't even attract the charging section of GST, can I say that? So if I say that for charitable trusts, for educational institutions, the necessity of going into an exemption doesn't arise. In my humble view, charitable institutions which carry on education, which carry on medical relief, which carry on propagation of religious activities, spirituality, yoga, etc. Take care of the poor, take care of the old. In my humble view, you cannot say that these are carried out in the course of furtherance of business. For a simple reason, it may be a vocation, but there is no consideration which is fixed. This is very important for us, because in GST, often I have seen authorities saying there is no exemption for this, so you're taxed. It is not so. If they care for the poor, care for the old, giving education is without any consideration, and the trust or the educational institution runs only on donation, let us say, such kind of trusts are completely out of the GST law. There is no need for them to satisfy the terms of an exemption notification. The very fact that their activity is not in the course of furtherance of business, very fact that they don't charge a consideration under contract, will take them completely out of the GST regime, in my humble view. So therefore, I am of the view, this is one area where several decisions of the court, the Supreme Court in Queen's Medical, Gujarat High Court in Sabarmati Ashram, the Delhi High Court in Institute of Chartered Accountants of India, the House of Lords, the Institute of Chartered Accountants of England and Wales, all these decisions will prove that educational institutions charitable institutions, institutes set up under the Parliamentary Act for the purpose of fostering education, chartered accountancy, cost accountancy, company secretaries, do not supply, they are not supplying services. They are institutions which are set up under the Act for the purpose of discharging certain statutory functions. That is why the House of Lords in ICAEW said you can't equate them and bring them under a VAT for the services that they are doing. That is why the Delhi High Court said Institute of Chartered Accountants, for example, it's a charitable, very much charitable purposes, because education is charitable purpose. You can't say that they're doing it in the course of furtherance of business. There is no contract in consideration. They are set up as a mutual benefit body for the purposes of fostering the membership of the profession. They are not into, the members may be exercising a profession. The institute does not exercise a profession. It is set up for noble purposes, to protect a noble profession. So in my humble view, charitable institutions are completely out of the GST net for the very same reason they're out of the IT net, that they do not carry on business. They do not further business. They are only doing activities based on donation and not on any business principles. So if you look at educational institutions, for example, education, in my humble view, after the decision of the Supreme Court in TMA Pice case reported in AR 2003, education is not business, it is not vocation. Supreme Court says education is occupation. If you look at the definition of business in the GST Act under 2(17), it talks of vocation, it does not talk of occupation. Education, in my humble view, does not come within the clutches of GST at all, because as is recognized in our, whether an exemption is there or it is not there, you have an exemption to educational institutions. Education as a sector, in my view, there is no contract consideration, furtherance of business. However, this is a view that is going to be contested hotly by the department, and we are going to see a lot of action coming in what I'm telling you. But as you will see, many of the decisions that have come about on educational institutions and charitable institutions in the Income Tax Act can certainly be applied in our GST law. Let us look at then healthcare services. Fortunately, there is no controversy in healthcare services, because today healthcare services is exempted from GST. But if you look at 1023C of the Income Tax Act, it talks of income earned by a hospital or institution existing solely for philanthropic purposes and not for purposes of profit. So the purpose becomes important in income tax. But as far as GST is concerned, healthcare services is completely exempt. There is no such thing as purpose. So a doctor who treats in a private hospital, a doctor who treats in a government hospital, both are exempt, because purpose test, which is there in 1023C of the Income Tax Act, is not applicable in the GST regime at all. GST has given a blanket exemption. And healthcare services is not only diagnosis and treatment. Please understand that it is also for the purposes of detecting an illness, treatment of illness, care for illness. All of this is covered. Therefore, when you look at healthcare services, even preventive medicine is covered in healthcare services. It's not only the sick person who goes to a hospital and is treated who's exempt. Even a person who goes, let us say, as a precautionary measure, is tested and they're given medicines on a precautionary basis. When these persons, healthcare services, they get exempted. The exemption, however, says cosmetic and plastic surgery, hair transplant will not be included in GST. They say this. But let me tell you, cosmetic and plastic surgery which arises out of trauma, say an accident, for example, or there is some development, I've seen some children not having jaw, for example. For them, a jaw is to be reconstructed. The face is to be reconstructed. People who meet with accidents and have their face disfigured and therefore it is getting reconstructed. This will come under the exemption category. This is not for cosmetics, but this is a treatment for a disease. So the interplay between these two in healthcare services, as you see in charitable purposes, it is very close. But in healthcare services, it is quite divergent. Because a hospital which carries on its activity for the purposes of profit will be bought under the Income Tax Act, but it will be completely exempt under the GST. So this difference should be kept in mind when we deal with both the laws as regards healthcare services are concerned. Then let us look at one more area where I feel there's going to be a lot of action in future. The taxation of the e-commerce platform. This is something which is very, very bewildering to me, because I found that in GST you have section 14 of the IGST Act, which brings to tax what is called the online information services, what is called OIDAR, software delivered through internet, e-books, e-movies, e-music, e-software, so many intangibles. Under the OIDAR services, if they are supplied for business, the business entity pays it on reverse charge basis, especially when they're importing. I'm talking of import of services. But when these services are imported by non-business, then the person who provides the services from outside India will have to either have an office in India or they have to have a representative in India who pays the tax. You contrast this with what I call a very funny levy which has come into the regime called the equalization levy. Equalization levy started off as a levy first in 2016 for services of online advertisement, what is called digital advertising space. Supposing I were to put an ad in Google and Google allots me a space, this came about. Then in Finance Act 2020, this was expanded to cover online sale of goods, online provision of services. Now, there is something which strikes me about these two, and it is this: the government of the day, the research papers which I had I looked through and saw, seems to suggest to me that the government is not clear whether they should include it under the income tax or it should come under the GST regime. So they cleverly put it under a chapter in the Finance Act. I am of the firm view that the equalization levy is unconstitutional. It's a colorable exercise of legislation for the reason that it is already covered under the GST law. Services which are imported, OIDAR covers them very clearly. And if you look at the definition of what is services in 217 of the IGST Act, especially as regards OIDAR services, it says this: services whose delivery is mediated by IT over the internet or electronic network, and the nature of which renders the supply essentially automated, involving minimal human intervention and impossible to operate before IT, in the absence of IT. It also includes advertising on the internet, providing cloud services, provision of e-books, movie, music, software, intangibles. Now, I have not been able to see the difference between, on the one hand, the equalization levy, and on the other hand, the OIDAR services. If you look at section 52, e-commerce operators are covered. So if you look at the equalization levy, to my mind, it looks that they have brought about an additional levy, which they actually is covered substantially, I would say, if not wholly, under the GST law. So this is one area where I feel that there is going to be a conflict. Income tax talks of equalization levy, the GST talks of OIDAR services. And to my mind, if there is a clash between these two, and this is where you should invoke 246C. This is the area where you should invoke 246C. You should say, if the scope of the levy is the same under GST and under income tax, you must, it's not under income tax, under a Finance Act proposition, which is called the equalization levy, you must say this is actually a topic which should have been under 246A and could have been taxed only on concurrent legislation by the center and the states. It's the subject covered by 246A. It is not covered under 246 at all. And this is where 246A will take precedence over 246. And therefore, in my humble view, when it comes to the taxation of the e-commerce platform, precedence should be given to the GST levy over equalization levy. Unless the government can clearly show that these two are different, in my view, they look very, very, very the same to my eye. Unless I am missing something, or my friends who also have the same view are missing something, both these levies seem to be almost identical. The services done in respect of online sale of goods, let us say an e-commerce operator, let me go to each one of them. Online advertising is nothing but advertising on the internet, which is covered in the OIDAR. Online sale of goods owned by e-commerce operator, what does he get? Commission. It's a service. It's covered by GST law. Online provision of services by e-commerce, that also is covered under the GST. Online sale of goods, provision of services facilitated by e-commerce operator, he gets a commission, that is covered under GST. What really is the difference between these two levies? I have failed to see. In the one hand, you say the resident has to deduct 6% tax on online advertising, for example, and 2% on the non-resident e-commerce operator is liable to pay 2%, you say. On the other hand, the person in GST, you say the person in India has to pay reverse charge. So in my view, if you want this ease of business, doing business to happen, you must remove this equalization levy completely, because it comes in the way of doing business. It makes products costly. because ultimately all this is passed on to the consumer. Let us not fool ourselves by saying that those who can afford computers or those who can have online are rich people, they can pay several taxes. I think we should stop all this foolery. Today, the online platform is used in towns and villages probably as much as the city uses. It has become a necessity. So in my humble view, the taxation of e-commerce, in my view, the equalization levy can neither be justified under entry 97 or under 92C as it was earlier, which was never enforced. Actually, it is a topic which comes under 246A, and therefore it cannot be justified under 246 at all. Is my humble view on this subject matter. Then let us examine another very important concept in Income Tax Act vis-a-vis the GST, the concept of mutuality. Concept of mutuality is well ingrained in the Income Tax Act. In Dublin Corporation's case, as well as in Kikabai Premchand versus CIT 24 ITR, you'll see same thing, same how the judges think alike. No man, in my opinion, can trade with himself. This is the concept of mutuality. No man, in my opinion, can trade with himself. You cannot say right hand is selling to left hand. Not possible. You can't trade with yourself. This is the concept of mutuality. If you look at it in the service tax and sales tax regime, Calcutta Club's case had the fortune of arguing it, being one of the persons who argued this case among the many legal luminaries who were there. Calcutta Club's case, Supreme Court said the same thing. Even in sales tax regime, even after the introduction of Article 366(29)A into the Constitution, even after the introduction of several explanations in the service tax regime, saying the club and members are different, Supreme Court said this. Since sales tax and service tax depend on consideration to flow, an association which is set up for the purpose of convenience, that's called a members club, whether it is incorporated or unincorporated is completely different. Supreme Court said the concept of mutuality extends to these sectors, that is the services as well as the sales, because for sales and services you should prove that there is a consideration, and consideration cannot flow between the same people. You can't profit with yourself. Now we'll have to see whether all these decisions which were rendered in the income tax regime, you have Bankipur Club's case, you have Calcutta Stock Exchange case, you have Bangalore Club case, you have a whole host of decisions in income tax. Each one of them leaving, stressing on something. If you look at CIT versus Madras Race Club, but what does Madras High Court say? The application of the principle of mutuality is not destroyed with the presence of transactions which are non-mutual in character. You apply the principle of mutuality to the members. Non-members can be brought to tax. Members, no. Why? Because you can't trade with yourself. You see, in Bankipur Club's case, what did the Supreme Court say? 226 ITR. As a rule, a mutual association can be incorporated as a company. Even if it is so, that does not affect the mutual character. Just because I make it as a company, limited company, doesn't mean that I'm not mutual. So members clubs, members clubs are different, members association are different from others. Proprietor clubs which sell services to others or sell goods to others, they can be taxed. Members association, members club, whether they're incorporated, they're unincorporated, the principle of mutuality will apply. When you look at GST, section 7, that is the supply section, says to constitute a supply, there should be sale, barter, etc., for a consideration. Consideration requires two independent persons. Therefore, if there has to be two independent persons, if there's only one person, there is no tax. If there are two persons, there is tax. Some people tell me in 2(17), clubs are included. In the definition of business under 2(17), clubs are included. So automatically the tax will come. My humble opinion on this is that tax does not flow, because even when constitutional amendment was made to bring clubs under taxation, the Supreme Court in Calcutta Clubs case said, in spite of the constitutional amendment, because the amendment itself talks of consideration, there should be two people. And if two people are absent, you can't bring it to tax. This is, if it is true of a constitutional amendment, it is much more than true for a statutory provision. Let me put it this way. 2(17) of the GST Act says business includes provision by a club, association, society, or any such body for a subscription or any other consideration. Please see the words, for subscription or any other consideration. Therefore, subscription is a consideration. Any other consideration of the facilities or benefits to its members. So it is restricted only when an association gives facilities or benefits to its members. If the members themselves contribute the money and I'm as an association only maintaining, so you take a flat association, for example, an apartment owners association, the members are the one who give the money. The association merely maintains those assets. And in many states, including the Maharashtra state, it is mandatory to have owners association, apartment owners association, mandatory to have. Therefore, there's nothing like the association giving benefits to the members. The members form the association for using facilities, which they themselves have paid for. It's not the other way around, that the association buys and gives it to the members. So this business definition of clubs and associations is restricted only where the clubs and associations are providing services for the purposes of a consideration by giving facilities and benefits to members, not otherwise. Therefore, in my humble view, all the constituents of supply as set out in section 7 of the CGST Act are not present in members clubs. Therefore, whether the contribution is 7,500, below 7,500, above 7,500 is of no consequence. They cannot be brought to tax on the principles of mutuality. This will apply to members club. This will apply to flat owners associations. This may not apply to proprietor clubs which actually sell and give services to non-members. But this principle of mutuality, in my humble view, as is set out in the Income Tax Act and now set out in Calcutta Club's case by the Supreme Court larger bench, will apply on all fours to the to our GST law also. So this is a place where you can refer with profit to the income tax definitions which are there, and all the old decisions Styles decision in the foreign decisions which are there can be also relied upon for this purpose. One more. So now we have looked at some fundamental concepts between GST and income tax. Mutuality, you looked at charge, you looked at illegality of income, you had looked at charitable institutions, you had looked at e-commerce transactions, especially the equalization levy. Like all these topics we have covered. Let us look at this input tax credit concepts. There is one particular concept where there is a deep interface between income tax and the GST provision, and it is here. Under the GST, input tax credit is given in respect of capital goods, inputs, input services. They also say, by explanation to section 17, plant and machinery which are embedded to the earth is also eligible for credit. In other words, works contracts, services in respect of plant and machinery are eligible for credit. They, however, say plant and machinery does not include land, buildings, or civil structures. The question which has come about in the Income Tax Act, several cases are there. If a building is adapted to suit a particular purpose, for example, you take a factory, it is going to manufacture PCBs. Because it is manufacturing PCBs, there should be no pollution at all. So the entire factory is air conditioned. Entire factory is fitted with false ceiling and a whole lot of other equipment which is fixed to the wall. Some are not fixed to the wall to ensure that there's absolutely no pollution. This is a building which is made suitable for manufacture of PCBs. Can you say that this building is a tool? If you look at Income Tax Act section 43, prior to its amendment in 2004, Supreme Court had taken a view, several decisions. Venkat Rao's case 243 ATR. Of course, there was a slight divergence in Anand Theater's case, but that was reconciled in Victory Aqua Minerals case by the Supreme Court. And what the Supreme Court said, and several high courts, what did they say? They said this: if a building is meant to house several facilities, but if that building becomes a tool of your business, it is so constructed, like nursing homes are so constructed. For example, the CT scan room is constructed in such a way that there is no radiation, or radiation is minimized. If a building becomes a tool, it becomes plant. This is the concept in income tax. That is why they brought about Amendment 2004 saying plant does not include building. But they have, I think the amendment in the Income Tax Act is incomplete. They are only talking of building per se. But if a building becomes a tool of your business, in my view, it can still be called a plant. And in GST, it is even better. When you look at explanation to section 17, it says it excludes land, building, and other civil structures. Plant and machinery, when I take works contract services to build a plant, which is a tool in itself, in my humble view, the credit is available. Yes, it will lead to litigation, but then it is not a building per se, it becomes a plant. A building becomes a plant when the building can be used as a tool for the business. That is the important difference between these two. So when it comes to input tax credit, I find that this one concept of definition of plant appearing in section 43 of the Income Tax Act as appearing in explanation to section 17 of our GST Act, there is going to be a lot of action in these two, because we are going to have a lot of case laws developed on this. Most of the people today don't take credit on building or land and etc. But once they believe that this itself is a plant, they may start taking credit, and then we will have a lot of case laws being laid down in GST whether credit is possible or credit is not possible. Now we look at some of the transactions that are completely out of both. If you look at section 10, for example, and schedule 3, let us compare these two, section 10 of the Income Tax Act and schedule 3. Section 10 excludes certain things from total income. It says these are not part of income. Can you call it an exemption, or can you call it an immunity from taxation? Many times we say this is an exemption. If you look at section 10 at some length, many people have tried to say that what is section 10 after all? It is just an exemption from taxation. But when I look at section 10, if you look at section 10, it is not an exemption. That is, what's the difference between an exemption and non-taxability? Exemption means that it is taxable, but the government has exempted it. Non-taxability means you cannot tax it only. If you look at the language of section 10, it says this: incomes which do not form part of total income, incomes not included in total income. This is how section 10 starts. So in my humble view, of course, several conditions are set out, but nevertheless, for such a non-inclusion, section 10 actually is a type of section akin to schedule 3. You can't bring these transactions under GST at all. Schedule 3 says services done by an employee to an employer cannot be brought to tax. So many people tell me, employer gives transportation facility. That is given by employer to employee, and therefore it should be taxed. I have read several authority for advance ruling decisions also, which talk of the same thing. It is given by employer to employee, not the other way around. My humble view on it, this is this. Let us look at schedule 3, what it says as regards these transactions. The wordings of schedule 3, if you have to look at it carefully, gives you a completely different picture. Services by an employee to the employer in the course of or in relation to employment. Please keep these two things in mind. In the course of or in relation to employment. Employee gives certain services. He expects certain things in return from the employer as consideration. What are they? Salary by way of cash, dearness allowance by way of cash, house rent allowance by way of cash. He also expects transportation to be done by the employer. Consideration. Food to be given by the employer. These are not services rendered by the employer to the employee. These are all consideration given which supports the employment contract. So it is in the course or it is in relation to employment. Please look at these transactions that way. Don't say employer is giving services to employee. No. This is a consideration paid by the employer for getting the employees. There's a difference between services being given and consideration. See the decision of the Supreme Court of the Andhra Pradesh High Court in Bhima's Hotels case, where they said provision of food by the employer is not a service. It is not a service. It's a consideration, actually, in my opinion. It's a consideration given for the employment contract. It arises out of employment. It arises in the course of employment. It arises in relation to employment. What do you mean in the course of employment? In relation to employment. I'll give you I was discussing this yesterday also. I'll give you this classic case where compensation cases which arise and go up to the way to Supreme Court. What is in the course of employment? A person was driving a truck in summer, and it's a long distance journey, so he stopped the truck and then he got out to have a bath in a canal. He went to the canal, he slipped, fell and died. Now the issue before the courts was, can it be said that he's going to the canal and slipping and falling is in the course of employment? Argument taken was his job was to drive the truck. Who asked him to step out and go to the canal? Why should I be made liable for this? There, Supreme Court said, if he has to perform his employment properly, he has to be fit and ready. If it's very hot, he has to go have a bath, freshen himself up and come and drive. Therefore, it is in the course of employment. And in our GST, the terminology which is used is in the course of or in relation to employment. So the food given by the employer, the insurance policies which are taken by the employer, the transportation which is given by the employer is nothing but a consideration for the employment contracts. All of this, in my humble opinion, are out of the GST regime because it is not taxable. It's like Section 10 of the Income Tax Act. It doesn't form part of total income. You don't even bring it to tax. It's not that it's brought to tax and then exempt. No, you don't even bring it to tax. That is the concept of Section 10. Same concept you find in Schedule 3. So the decisions that are there in Section 10, or in fact, in all the compensation cases which come out of labor laws or out of Motor Vehicle Act, those cases will be very useful for interpreting Section 10 and Schedule 3, because these are transactions which the legislature says are out of the tax net. They don't come in only. Schedule 3 transactions of the GST are not part of supply. If you look at the heading, activity or transactions which shall be treated neither as supply of goods nor as supply of services. The charging section is not at all invoked in these transactions. So the next time the employer and employee contracts come, please keep in mind that this is not the same. Employer consideration, employee services. Please keep this in mind. Then we come to another very important conceptual, what do you call, clash. There's no clash in law, but there's a clash in our minds only. You look at Section 28 of the Income Tax Act. Non-compete fee, for example, is brought to tax as income from business, profession, as the case. It was not there earlier. Courts had held that it cannot be taxed. It's a capital receipt. So they amended the Income Tax Act to bring in this into the regime. Now, if you look at the GST law, the GST law classifies non-compete fees and other obligations under Schedule 2, Entry 5E, agreeing to the obligation to refrain from an act or tolerate an act or a situation or to do an act. But please understand, non-compete fee may be brought to tax as income from business, and under the definition of income under 224, read with section 28. But when it comes to the GST law, courts have looked at it differently. For example, an employee giving notice period does not give the notice period of 2 months or 3 months as is required, and the employer deducts from his salary. Madras High Court has held no, it is not taxable under agreeing to an obligation, etc., because there is no such thing. If you look at the European Court of Justice decisions, Jagran Mohar's case, it's a very interesting case. I've told this many times. Batch of cases where farmers were producing excess milk, excess potatoes. So the government told these farmers, you're producing too much. So the prices have come down to nothing. So we will compensate you by giving you a lump sum amount. You please stop producing this much of potato or milk, as the case may be. Tax authorities across the world are the same. They are looking how to tax the persons. You cannot single out the tax authorities only in India and say they are only doing this. No, no, no. Everywhere, tax authorities are looking at new avenues to tax. Tax authorities said you are paying the farmer compensation, and this is nothing but an obligation for which he should be taxed under the VAT regime. He has refrained from supplying potatoes. He has refrained from supplying milk. So he will come under the definition obligation to refrain from an act or tolerate it. The European Court of Justice said, no, 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 no. Please understand, GST, that's a VAT regime abroad. You have to have supply to add value. If value is not added, there's no question of supply. If supply doesn't take place, there's no question of a value-added tax coming into the picture. This is a case where it does not supply at all. So where is the question of bringing it into a value-added tax regime? So the European Court of Justice beautifully said, no, 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 these transactions will not come under the GST. It may be taxed under the Income Tax Act here in India. But in my humble view, these employee retention amounts, these liquidated damages, compensation for not producing something, and these kind of activities, in my humble view, are not supply. And in fact, the retrospective amendment made to section 7 by introducing 7(1) capital A has made schedule 2 just a classification entry. Please read 7(1)A. What does it say? If you look carefully at 7(1) capital A, it says that where certain activities or transactions constitute a supply in accordance with the provisions of subsection 1, they shall be treated either as supply of goods or supply of services as referred to in schedule 2. So schedule 2 is only for classifying. It should satisfy whether it is a supply under 7(1). Only when it satisfies the conditions of being a supply, the question of going to schedule 2 arises. So please understand, my dear friends, schedule 2 does not make those transactions automatically taxable. Schedule 2 is merely a classification entry. 7(1) capital A has to be first looked into. 7(1) has to be looked into. If it is a supply under 7(1), it will be classified in the manner set out in 7(1)A. That is, you have to look at schedule 2. So don't think that transactions which appear in schedule 2 are automatically taxable. No, it is not so. It is not so. So please be very, very careful about what you apply here and what you apply there. It may not be the same. So we have to keep this in mind when you look at this provision. Now, several, I can go on like this, but then the session will not come to some end. So let me look at the other provisions of the law also. If we look at, when I talked of Schedule 2, I told you that Schedule 2 is only a classification entry. Many people say Schedule 2 is akin to Section 224 of the Income Tax Act. My humble request to them is that it is not. Deemed income which comes in Section 2(24) or in Section 9 or other sections of the Income Tax Act, which stretches the meaning of income to deem certain receipts as income. Please understand, 224 is completely different from Schedule 2. Schedule 2 is not deeming fiction. Schedule 2 is only a classification entry. 224 is a proper charging provision. Read with Section 4. Section 4 and 224 constitute a scheme of taxation of income. They can deem certain incomes, but when it comes to Schedule 2 is merely a classification entry. It is only Section 7 which will decide whether something is a supply or not. So please don't compare Schedule 2 with and say it's a deemed supply of services, like you have deemed income under Section 9 and Section 224 extensions. It is not the same. Keep this in mind when you study the two acts. When it comes to the law of assessment, there is a substantial difference between the two, and I'll tell you this. The assessment provisions in Income Tax Act are well laid out. In income tax, you don't have the concept of adjudication at all. You have only assessment. In sales tax, you have only assessment. In central excise and service tax, you had only adjudication. So GST law is a mix of these two. They bought some assessment provisions, they bought some adjudication provisions, and they've made a hash of it. The state sales tax authorities do assessments, the central authorities do adjudication. So nobody knows what is happening in GST. I can openly tell you this. State people send notices saying within 7 days you should pay, which is the wrong thing to do. Central people do adjudication, and nowadays without adjudication they attach bank accounts, they freeze the input tax credit ledgers. It's a chaos in the GST regime. Assessment provisions, however, under the Income Tax Act is well laid out. Starting from 139 filing of returns to 143, everything is laid out. I'm not saying there's no controversy there. There is, but the assessment provisions are better laid out. My opinion, the GST should have stuck either to assessment provisions or to adjudication provisions. They should not have married these two. And this was a recommendation which should always be giving. Please stick to the adjudication principles which were there under the excise and service tax law applied throughout India and the GST. Have one mechanism. Don't have these two mechanisms, because two mechanisms leads to confusion, leads to chaos, leads to. But one thing which is important, we should. What is the effect? If we look at the assessment and adjudication provisions, it is basically this. Whether you call it assessment, whether you call it adjudication, I am basically computing the taxes that are payable. I am trying to find out what is the tax that is payable by the assessee. Every tax legislation has the levy, the assessment, and the collection. These provisions of assessment and adjudication fall under the second step, that is assessing the tax which is payable by the assessee. So they could have simply in GST stuck to the adjudication provisions. It would have been much more simpler. When it comes to appeals, substantially, if you see, they are the same, but there are some significant differences. The significant differences is what I will point out here. The appellate authority, the first appeals and the second appeals in terms of income tax, they have a power to condone the delay. Time limits are not specified, but in the excise law, the service tax law, the GST law, condonation of delay is only up to 1 month. You can't do more than that. For example, a commissioner appeals, you can file the appeal within 3 months, plus only 1 month he is given time. If it is beyond 4 months, the question of condoning the delay doesn't arise. Your appeal remedy itself goes in GST law. It's very unfortunate that these time limits are fixed in such unrealistic manners. You can't have two tax laws, one giving you, income tax giving you flexibility to the appellate authority to decide, and another saying there's no flexibility. Very unfortunate. In fact, tax harmonization should be done by the government, by the legislature, to make sure both these stand on equal footing. Both these stand on equal footing. Similarly, if you look at stay provisions, the Income Tax Act, till the recent amendment was done as far as appeals before the tribunal are concerned, they should align it. In the GST law, it is said first appeal 10% you pre-deposit, second appeal another 20%. So that is, when you go to the tribunal, you deposit 30%. In my view, and in income tax, if you see, the first appeal up to 20% can be deposited. And that same thing continues as far as the income tax tribunal is concerned, which can direct otherwise. Essentially, they will not, because 20% is a mandatory. In my view, they should harmonize these two laws and make it in such a way that for first appeals, you should have 10%. For second appeal, you should have another 10%. And then there ends the matter. 20% of the tax collected in advance, in my view, on disputes where records show, I'm not talking where records show that most of the appeals, 80, 90 or even more percent of the appeals go in favor of the assessee. If that is the case, then it calls, all the more calls for a lower pre-deposit figure. If history says that 80% of the cases assessees are winning, then it means that you have to respect that history and say, since you are winning 20% of the cases, 20% of the tax amount is a reasonable amount to have as pre-deposit. Anything more than that causes the appeal mechanism to become onerous. That's my view, my humble view. So the appeals provisions will have to be, the significant differences between the two will have to be probably merged into one set of appeals, where this question of going for stay application, I can tell you one thing, in the indirect taxes, the regime in 2014, this reform was brought about where they made mandatory pre-deposit. This has simplified and doesn't require the assessees to go for stay application, argue stay application. There is no need for it. It's a very welcome measure. It should be adopted in the income tax, like they have done now for the tribunal appeals. They talk of 20%. Even GST law, I think 30%, they should make it 20. And if you have 20 in both, it will be easy for harmonization of tax laws. Commissioner appeals in income tax can confirm, can reduce, can enhance, annul, send back. That is, the power of appellate authority is very wide as far as income tax is concerned. If you look at 251 of the Income Tax Act. But if you look at 107 of this GST Act, he can confirm, modify, annul, he can enhance, but he cannot send back. He is not allowed to send back the matter to the adjudicating authority. He has to do it himself. It's an extension of assessment. Very unfortunate. Your power of appellate authority should not be curtailed in this manner as they've done in GST. It should be like the Income Tax Act 251, where if the adjudicating authority has not applied his mind on certain issues, the matter should go back. These are the some differences between the two. Both talk of a time limit of 1 year for deciding the first appeals at least. Let me tell you, these are all indicative provisions. They are not compulsory. It is not compulsory that it should be decided within 1 year. Revisionary powers which are there in Income Tax Act are also there in the GST Act. 108 and 263 can be compared. There are some significant differences in the two. But if you look at the Income Tax Act, what is two conditions? One is the order of the assessing authority should be erroneous. Second condition, it should be prejudicial to the interests of the revenue. (108) does not talk of just being erroneous. It also talks of illegal or improper, has not taken into account material facts. But the language is somewhat the same, where they say revisionary powers you can do if what the order is erroneous and it is prejudicial to the interests of the revenue. Kindly understand, prejudicial to the interest of the revenue doesn't mean that another view is possible. No. If you look at the decision of the Supreme Court in CIT versus Greenworld Corporation, 181 taxman, what did the Supreme Court say? Two conditions are there. Order is erroneous. It is prejudicial to the interest. When you talk of orders erroneous, just because the AO has taken one view does not mean that it is an erroneous view. And therefore, revision is not possible just because your view is different from the AO's view. It's a very good decision of the Supreme Court. Therefore, just if there are two views possible, 263 cannot be invoked. Likewise, 108. Two views possible, 108 cannot be invoked. 108 can be invoked only if the order is completely erroneous, illegal, improper, that way. There is a grievous error in the order. That is what Kerala High Court says in Bismillah. There is a grievous error in the order. Then you can look at revisionary powers. So in my view, when we look at 108 of the GST Act, the decisions which come under 263, the jurisdictional issues which come under 263 of the Income Tax Act, we can very well use to our advantage. Law relating to recovery. Recovery of tax, in income tax under 220, it's a detailed procedures have been laid out. Somewhat akin to the Code of Civil Procedure. While in GST law, it is completely different. It does have some portions of the GST law also correspond to the Civil Procedure Code, but there are some additional provisions which make the recovery of tax a very draconian exercise under the GST law. For example, section 78, which says tax can be recovered within 3 months from date of service of such order. I think 78 will have to be read down or read in consonance with section 106, because the right to appeal is there. When you have a right to appeal and an appeal has been preferred, recovery of tax under section 78 cannot take place. Otherwise, it will render the appeal provisions completely odious. Plus 78 simply talks of recovery of tax within 3 months. Does not talk of any notice to be issued, in my view. 78 has to be read down in the manner that has been suggested in Supreme Court in CB Gautam's case or in Sahara India firm's case, that the principles of natural justice will have to be read into a section if it is not there, especially when serious civil consequences are indicated. If you look at 78, what does it say? Any amount payable by taxable persons of an order passed under this act shall be paid within a period of 3 months from date of service of order, failing which recovery proceeding shall be initiated. Provided that where proper office considers it expedient in the interest of revenue, he may, for reasons to be recorded in writing, require the said taxable person to make such payment within such period, less than a period of 3 months as may be specified. In my view, this 78 initiation of recovery proceedings is not in consonance with the rest of the act and has to be either struck down or read down. They should build in these principles of natural justice into this. They should also ensure that the appeal provisions are taken care of before recovery is done. When it comes to other aspects of these two laws, I think I'm running out of time. If you look at the prosecution, largely in Income Tax Act, arrest is seen not as an automatic choice. Recovery of tax is taken as an automatic choice. But unfortunately, I find in GST law, the GST officers want to use arrest as a threat to recover. This is a very unfortunate state of affairs, which should be avoided. We should look at arrest as the last resort, not as the first resort. Tax levy, assessment, collection, recovery, then only prosecution. We don't look at it the other way around, by first threatening him to arrest or arresting him and then trying to recover the tax, not doing an assessment at all. This method, which has been followed in service tax, which has been followed in excise and customs, and which is now followed in some places in GST, I think we will have to take a step back. Government has to take a step back, considering the fact that the maximum imprisonment under the GST law is only 5 years for the worst of crimes. I think the government has to take a step back and try to ensure that arrest is used only as a last resort, not the first resort. As far as audit accounts and other areas are concerned, and liabilities in some specific cases are concerned, I would not go further into this. The slides are there. We may look at the slides and come to a definite answer on whatever I have said during the course of the last almost 1.5 hours. I would now request the organizers to take the session back to them, and they can now ask the question and answer session for the next 15 minutes or so, as may be decided by them. So I would at this moment again thank the WIRC for coming out with what I consider as a path-breaking exercise of comparing laws with the GST law. And it has, whether it has enriched the audiences or not, it has enriched me in this process. So I thank all of you, and especially the WIRC for this.
Sir, excellent session, I should say. So there was always a misconception among members, any chartered accountant, मेरे P&L में इनकम कोई भी आ गया तो उस पे GST भरना है कि नहीं भरना है. And you started with that only, the difference between income and the supply. That what everybody is missing. So really fantastic session. So I will not take much time. I request CA Janit Shah. So kindly take the question answer session.
मिश्रा जी स्क्रीन शेयरिंग का ऑप्शन दीजिए मिश्रा जी. Just a minute, sir.
Yes, sir. Sir, you can ask me the questions. Even if the screen is not shared, please ask the questions.
It is clear, sir.
I'll do, sir. Sir, a few questions, sir. Not much question. So few may be related to what we have taken up for the discussion, and some may be related to in general income tax and GST. So starting with the first question, I'll summarize. It is with respect to the
Yes.
provision of TCS.
Yes, the
So,
TDS provisions which are there, 2061H. Now, I can't understand this CBDT's view at all. Deducting tax on tax is most reprehensible. I think it should be avoided. You should not have this just because sale consideration in terms of the Income Tax Act includes the GST collected. You can't put the assessees to difficulty by asking the other person to deduct and give it back. So in my view, this CBDT clarification has to be challenged or withdrawn. You can't have a TCS on the GST amount which is collected. After all, we should understand you may be part of the sale consideration, but we should understand that the indirect tax is the incidence. The person only collects and pays. The assessee only collects and pays. He's doing a postman's job. You can't subject him to a TDS on that TCS. So it is very unfortunate.
So next question, partly related to constitution as well, which was taken up yesterday also. But it says that section 9 of the Income Tax Act says that only income earned or received should be liable to income tax, and not income agreed to be earned or agreed to be received.
Yes, correct. In fact, I'm aware of this. Karnataka High Court in some of the cases in sales tax had said that there is nothing like agreed. You either have sale or you don't have sale. So if you look at the GST regime, so as to ensure that the time of supply you collect it on advances, you have made the charging provisions, supplier agreed to be supplied. This is what you have done. So one has to challenge this in High Court. You can't get any relief up to the tribunal. You have to challenge it in High Court saying, can you tax something which is especially a transaction tax where there is no supply which has taken place yet. If you do that, then you have to challenge section 12, section 13. Time of supply has to be challenged along with section 7. It's a very good question. It's a very good question. And my view is that the only relief which is available is you have to go to the high courts and challenge it.
So next 3 questions are related to your discussion in respect of employer-employee payments and everything.
The third question I can see, in my view, I have already made this very clear. The consideration, if charged by the employer, is a cost meeting exercise. The very provision of food, in my opinion, is a consideration for the employee's services. If you charge some amount for it, does not therefore mean that it will attract GST. It is something in relation to or in the course of employment. Even the charging is in the course of employment. It's only in the course of employment. So in my humble view, all these transactions are out of the GST because of the wide language used in Schedule 3. This is my humble view.
Okay, this is fourth question.
HR policies of the organization also are important. It is not only the employment letter. The reason is because employment letter may specify certain things. HR policy of the company may specify things in common between several employees. For example, they may have a group insurance taken, which may not be specified in your employment letter alone, but these are all deemed conditions which are there. So in my view, the HR policies for giving transportation is part of the employment, because it does not, the schedule 3 does not say as is specified in your employment contract. It only says what arises in the course of employment. That's all. Therefore, you don't need to stick only to your contract. All your HR policies also will be applicable.
Sir, just coming back to the fourth question, you have covered it to a great extent. So fourth question talks about Schedule 1 also, wherein gifts exceeding 50,000 are considered as Schedule 1 item. And so, and especially Section 2, subsection 31 for consideration definition. It says
Yes.
inducement for a supply of service. So, how do you, sir, can you throw some light on that?
You see, what happens in case of an employee, my view is that anything that arises in the course of employment is out. So all this gift business which comes in your Schedule 1, which is treated as a supply, in my view, has to be read subject to Schedule 3. And to that extent, in my view, why I'm saying always my view is because you can have a different view. My view is that anything that arises in the course or in relation to employment is out of supply. Section 7 itself, you could not have bought it under Schedule 1. So giving gifts 50,000, 1 lakh, 1,50,000, all this is in relation to employment, my dear. You can't bring it to tax. You can't bring it to tax.
So we are done with the questions.
Yeah, you want to, in my view, these supplies are nothing but consideration. This is nothing a consideration for the employment contract. I don't know how courts will look at it. This is how I look at it. Yes, sir.
Sir, I also want to ask one question.
Please go ahead.
Answer is very simple. Question is also very simple. But many members has at very end, I always get this kind of issues every week from one or the another member. That's why I'm asking this issue.
No, your voice is breaking, Manish ji. I'm not able to hear you.
Now it is clear, sir.
Yes, now it's clear. Please tell.
Yeah. Okay. So one thing is that, sir, I'm getting a dividend income. Whether
dividend income.
GST will, yeah. So you have already cleared, but I'm just dividend income. Another is that we are a chartered accountant firm. We are getting interest on capital, then share of profit, then the remuneration.
Let
so
me be
whether
very
it is
clear.
taxable, and if it is not taxable, then why not taxable? I know that this is very simple question, but many members have this kind of doubt in their mind.
See,
so, what do you say?
Partnership and partners are one and the same. Only for the purposes of assessment, they are considered as two entities. Partnership itself means, you carry on legal business or lawful business for the purposes of sharing profits. Whatever remuneration that is given to you, whatever is given to the partner is nothing but profit. You call it remuneration, but it is nothing but profit, which is shared. Sharing of profits is not a supply by one person to another. So let us be very clear. There should be supply, there should be consideration. One person to another person. And just because you're assessed separately does not mean that you are separate in law. Partnership law does not regard you as two separate people. You may be assessed separately. That is for a different purpose. So profit sharing agreements do not come within the clutches of GST at all, in my humble view. And therefore, this partnership incomes which you are specifying, dividend which is declared by a company is nothing but distribution of profits. Some will do it as a dividend, some may keep for and issue subsequently as shares, etc., etc. These are all application of application of your profits. Therefore, in my view, none of this come within the clutches of GST at all. Okay. And it is for that reason.
Thank you very much, sir. So your session was really excellent, and we have with us our regional council member CA Jayesh Kala, who is chairman of our income tax committee also.
Oh.
So I request, I request Jayesh bhai to give a well-deserved vote of thanks to Raghuraman sir.
Thank you, Manish bhai. And Raghuraman sir, is really, you have spoken wonderfully on the subject, and I'm very sure the participants must have immensely benefited out of your session. And we would regularly take your advice and take your sessions for the benefit of our members. In today's era of GST and other acts, it is very important that we connect all the acts with GST, and now as such even income tax have started connecting with GST, and form number 26 AS of income tax will have detail of GST also. So you cannot be aloof nowadays that you know only GST or you practice only in direct tax or indirect tax. It is not possible. You have to understand laws of each and every other areas also. And once again, we express our gratitude, Raghuraman sir. You have spoken wonderfully on the subject and have given a lot of insight to all the members and participants present over here. Thank you very much, sir. Thank you.
Thank you, sir. Thank you. Thanks a lot. Thank you.
Thank you very much, sir.
Manish sir, bye.